Less than 100 days ago, our nation was on the edge of an economic cliff. The number of coronavirus cases was increasing by more than 20% per day. Treasury were contemplating a fall in GDP of more than 20% in the June quarter. This was the economists' version of Armageddon. In response to this 1-in-100-year global event, we put in place a series of health measures that have hit the economy hard. These were tough decisions, but these were decisions we had to take. Saving lives was our priority, and that has been the result. While tragically 102 people have died as a result of the coronavirus, it stands in stark contrast to the United States, where more than 100,000 people have lost their lives, and the United Kingdom, where around 40,000 people have lost their lives. To illustrate how bad we thought it could get, we purchased 5,500 ventilators. But today, there is just one person in an Australian hospital on a ventilator as a result of the coronavirus. This has demonstrated the real progress our country has made on the health front. Notwithstanding the success of the health measures that we have put in place, they have come at a significant cost, which is illustrated in the national account numbers today. It's important to remember that it was quite early on in the March quarter that the health restrictions were starting to be implemented. Australia had its first coronavirus case confirmed on January the 25th. And a week later, on the 1st of February, Australia became one of the first countries to act in bringing in a travel ban on China. It was soon extended to Iran, South Korea and Italy, and then to all non-residents on the 20th of March. Social distancing restrictions were also implemented progressively in that quarter. On the 15th of March, outdoor gatherings were limited to 500. On the 18th of March, indoor gatherings were limited to 100. On the 20th of March, the 4 square metre rule came into place, and on the 24th of March, overseas travel was banned and limits placed on the size of gatherings at weddings and funerals. It was in this quarter, the March quarter, that consumer and business confidence fell to its lowest level on record, that the ASX 200 lost a third of its value, and on the 16th of March saw its biggest daily fall of 9.7% on record. When combined with the ongoing drought, which saw farm GDP fall by 2.4% in the quarter, and the devastating impact of the fires that were raging across many states, one looks back on the March quarter and there wasn't much good news. Seen in this context, the fact that the Australian economy only contracted by 0.3% shows the Australian economy's remarkable resilience. Indeed, Australia's performance in the March quarter compares very well to that seen in other nations, with negative growth of 9.8% in China, 5.3% in France, 2.2% in Germany, 2% in the United Kingdom, and 1.3% in the United States. With 40 million jobless claims in America over the last 10 weeks, the economic situation in that country and across the globe is quite severe indeed. In Australia's remarkable story of almost 29 consecutive years of economic growth, this is only the fourth negative quarter in that time. While growth was up 1.4% through the year, the March quarter contracted, as I said, by 0.3%, broadly in line with market expectations. While government spending and net exports contributed to growth in the quarter, it was more than offset by the contraction caused by falls in consumption, investment and inventories. While fear of a lockdown saw panic buying of food and household items, total consumption still fell by 1.1% in the quarter. This is the largest quarterly decline in consumption in 34 years, with 10 of the 17 consumption categories falling. Spending on transport services and hotels, cafes and restaurants experienced their largest falls on record. In the words of the Australian Bureau of Statistics, the sharp reduction in spending on services was due, and I quote, to the introduction of social distancing restrictions and travel bans. The household saving ratio increased to 5.5% in the quarter as household income increased, but household spending fell. The health-related restrictions also significantly affected our tourism and international education industries. Net exports contributed 0.5 percentage point to growth in the March quarter. Services trade was heavily impacted by travel bans on both inbound and outbound travel. After 8 consecutive quarters of growth, services exports fell by 12.8%, while services imports also fell sharply by 13.6%. Australia recorded its fourth consecutive current account surplus of $8.4 billion in the March quarter, the longest consecutive period of current account surpluses since the 1970s. Exports continue to be supported by free trade agreements, which now cover around 70% of our two-way trading relationships, compared to just 26% when we came to government. New business investment fell by 0.8% in the quarter, with a decline in new machinery and equipment and new building more than offsetting an increase in new engineering construction. Mining investment rose by 3.6% in the quarter, the second consecutive quarterly rise, with only a few mining projects experiencing delayed final investment decisions as a result of the uncertainty caused by the coronavirus outbreak. The ABS CapEx survey released last week showed that despite investment intentions in the mining sector being downgraded, they do remain positive for 2020-21. Inventories detracted 0.2 percentage points from GDP growth in the quarter. Inventories in retail, wholesale and manufacturing fell as households bought goods at a faster rate than they could be manufactured. These falls were partially offset by a rise in the public authorities' inventories, including health inventories, due to a build-up in the national medical stockpile. The economy continues to be supported by new public final demand, reflecting spending across all levels of government, which rose by 1.4% in the quarter to be 5.3% higher through the year. Turning to the income side, compensation of employees, which measures the national wage and salary bill, was up 0.5% in the March quarter and to be 4.2% higher through the year. The increase in the compensation of employees was driven by an increase in employment, with 39,000 jobs created over the quarter. With restrictions easing, we are seeing some encouraging signs across the economy. As the Reserve Bank Governor said last week in evidence to the Senate Committee on COVID-19, and I quote, With the national health outcomes better than earlier feared, it's entirely possible that the economic downturn will not be as severe as earlier thought. The ASX 200 is now just down 19% from its record high on the 20th of February and more than 32% higher from the recent low on the 23rd of March. The Australian dollar has now more than fully recovered the 11-cent fall that occurred in less than 2 weeks from above 66 cents on the 9th of March to a low of 55 cents on the 19th of March, levels that were previously seen in October 2002. Consumer confidence has increased for 9 consecutive weeks since the announcement of JobKeeper and has recovered around 95% of its fall from mid-March. Business confidence rose in April to reverse around 1/3 of its record fall in March. However, it does remain well below its 10-year average. With restrictions starting to lift in accordance with the decisions of National Cabinet, it will be paramount to build confidence and to keep the momentum to consolidate these gains. Today's national accounts show once again that in the face of a 1-in-100-year global pandemic, the Australian economy has been remarkably resilient. We entered this economic crisis and this health crisis from a position of economic strength. Growth was rising, unemployment had fallen to 5.1% in February, 1.5 million new jobs have been created, and the budget was back in balance for the first time in 11 years. The strength gave us the fiscal firepower to respond as we have done. Around $260 billion in economic support, or the equivalent of more than 13% of GDP. We are not through this crisis as yet. And there will be some difficult days ahead. But our nation, working across geographical and political boundaries, has made great progress. Having withstood flood, fire, drought, and now the coronavirus pandemic, Australians have shown a unity and purpose, which has enabled us to make significant progress and for which all Australians can be very proud and very confident about their future. I'm just going to take you through briefly some slides to illustrate some of these points, and then happy to take some questions. So the first slide shows that at 0.3%, we're seeing the economy contract in the March quarter, but we're still seeing growth of 1.4% through the year. Next slide. This is the global comparison. This is a very powerful and relevant chart. At 0.3%, we compare to Japan at 0.9%. Korea, a little bit higher. The United States, as I said, at 1.3%. The OECD average is more than 6 times what we've seen in Australia. So the average fall across the OECD is 6 times what we've seen here in Australia. The United Kingdom, Canada, Germany, France at nearly 6%, Italy, and then of course China at 9.8%, which saw the coronavirus emanate from. That chart shows Australia's relative performance in the face of a global, once-in-a-century pandemic. Next slide. This is the contributions to GDP growth. Obviously, public final demand, government spending, and net exports have contributed positively to GDP. But less investment dwelling, business, as I mentioned, the change of inventories, but it's really a consumption story. The biggest fall in consumption at 1.1% that this country has seen in 34 years. Next slide. Again, this story breaks down what has happened in consumption. Very important slide. Tells the story of goods versus services. People buying food, pharmaceutical goods, goods for their home computer at home as they were preparing for lockdown, saw a rise in consumption for goods. But 2.4% fall in services reflects that people weren't going out to cafes, weren't going out to restaurants, weren't booking in hotels, and weren't taking transport. This is the story of what was happening in the economy as we saw panic buying in our supermarkets, but we saw people increasingly staying at home. Next slide. This is by category, and again you can see food, alcohol, communications equipment, consumption increasing. Massive drop. Transport, hotels, cafes, clothing and footwear as people stop going to their retailer. Next slide. This is, again, a very interesting slide about the contrast about what's happening in the economy. I'm looking at a Western Australian report or a Queensland reporter in the mining sector. The mining sector hasn't got a bad story to tell there. 3.6% up. And this 10.3% through the year is, I think, the strongest it's been in around 8 years in terms of through the year number. Non-mining, we're seeing it down by 6% through the year and 2.1% in the quarter. Contrast, and this brings very much to the fore what are the challenges we as a government are going to face and state governments are going to face in getting business investment back, because we want business to be at the heart of the recovery, and business investment will lag an improvement in consumption, an improvement in confidence. It will still take some time to get investment back to where we were, even though confidence will start coming back. Next slide. Government spending continuing to support the economy, 5.3% up through the year and 1.4% in the quarter. Government spending, state and federal. Next slide. Export and import volume growth. Again, this is where the restrictions had a major impact. This drop here is both a consumption and a services story, 7.7% down through the year, 6.2% in the quarter. This is where tourism was falling as a result of the restrictions. And in terms of our exports, as you know, we saw international students being unable to come because of the border restrictions, and we also saw that affecting our tourist market as well. Next slide. This shows how the drought and indeed the fires continue to affect our agricultural sector, down 10.3% through the year and 2.4% for the quarter. It's challenging, but the good news is with the rains, we're starting to see some restocking and replanting in our farm sector. Next slide. Household savings ratio. People are feeling uncertain, and when people feel uncertain about the economic climate, they save more. I think that's the end of it. Okay. So as you can see, it's a challenging time, but the economy is holding up relatively well compared to other nations. Andrew.
If this is what economic Armageddon looks like, to use your language, next quarter is going to look worse, surely.
Well, as I was saying, we were on the edge of the cliff. What we were facing was an economist's version of Armageddon. We have avoided the economic fate and the health fate of other nations because of the measures, Andrew, that we have taken as a nation. The social distancing requirements, the work that we've done on isolation and quarantine, the travel bans, that has seen the number of cases reduce dramatically. Now, as a result of our success on the health front, we are now starting to see the restrictions being eased. And as you know, National Cabinet set out a 3-step plan for removing those restrictions, which Treasury forecast, once done, will deliver about $9.4 billion a month to the economy and see 850,000 people get back to work. Now, the June quarter, the economic impact will be severe, far more severe than what we have seen today. That's what Treasury's advice to me is.
Treasurer, that's what next quarter's about, isn't it?
Well, based on what we know from Treasury, we're going to see a contraction in the June quarter, which is going to be a lot more substantial than what we have seen in the March quarter. The Finance Minister and I will be providing a detailed update on the economic numbers now in July as opposed to June, and we're doing so because we're going to announce at the same time the outcomes of our JobKeeper review. As you know, that is being conducted through the course of this month, and we want the outcomes of that review to be within the numbers that we announce in July. We also have that 3-step process, Andrew, that has been agreed by National Cabinet, and the intention was for those 3 steps to be completed by July, and that should allow us to get a better sense of where the economy is at that point in time. Lani.
Treasurer, was it actually a good thing then that people panic bought toilet paper? And, given the mining sector has been so strong, what is the government going to do in order to cut red and green tape to get more projects off the ground?
Well, as you know, we're working with the Western Australian Government to facilitate a speeding up of the environmental approvals and to reduce the red tape for major construction projects. And I think this will be one of the advantages of National Cabinet, is that we can have these discussions where state and federal governments share responsibilities. In relation to your first point about the panic buying, well, that was done. I don't support panic buying at any point in time. Certainly, some of those images we saw in the aisles of the supermarkets, the spats that we saw over toilet paper were completely unnecessary. But it was at a time when people were expecting that we may move to a lockdown, and that didn't eventuate because of the success we had in flattening the curve. Sorry, Mark.
Is Australia in recession today?
Well, the answer to that is yes, and that is on the basis of the advice that I have from the Treasury Department about where the June quarter is expected to be.
What you need to do to get us out of this recession is reverse consumption. So is your advice to the Australians to spend more, or are you restricted from saying that because of the state of the unemployment market?
Well, I think we will see consumption come back in accordance with the improvements we've seen in consumer confidence. So as I said, 9 consecutive weeks of consumer confidence rising, making up 95% of those losses that we saw in March. Consumption will pick up as the restrictions are eased, and that is really important to understand. As restrictions are eased, people can start to go out to the pub or to their shopping centre. And just a couple of days ago, I was in a pub in Hawthorn. There were 11 people in that pub who were on JobKeeper, workers, whether they were in the kitchen or whether they were at the front bar. The fact that those restrictions are now being eased and they can have customers come through the door will mean that that transition off that support will be easier for a business like that, as well as we'll see an increase in consumption as a result of those restrictions being eased. Michelle, I'll cut.
Anticipating that following that June review of JobKeeper, there'll be a major overhaul of that program, or do you think you'll just be doing tweaking?
Well, again, the Governor of the Reserve Bank has said it's very sensible to do a review at the midway point. What we want to do, Michelle, is understand where businesses are in the recovery stage. We want to understand whether the quantum, that $1,500 payment, continues to be the right amount, also bearing in mind that some people are getting paid more than they would otherwise get by virtue of having a flat payment. But in the context of an economy where the restrictions are being eased and people are getting back into work, we need to assess, and particularly paying a focus to certain sectors as well, we need to assess the continuation of that JobKeeper program in that context. And it's too early to preempt what the outcomes of that review will be, but any government decisions about the review will be incorporated into that statement that the Finance Minister and I will make in July. Sorry?
Now more resemble a mini budget if you're actually going to have policy measures in there?
You can call it what you like, Phil, but there will be significant detail in that announcement because, as you know, the budget will be in October.
Point out that business investment was weak in the March quarter and that it's going to lag during the recovery. You want a business-led recovery, so what can federal and state governments do to improve business investment through the back half of this year, indeed in following years?
Well, this exactly, John, goes to what the Prime Minister was talking about in his speech to the National Press Club, the supply-side reforms, the work on skills, giving employers the confidence that the skills coming out of our institutions are matching the needs of their business, cutting the red tape so that less time is spent by business filling in forms and more time is spent growing their business and innovating, focusing on the digital economy. And as you know, in the financial services space, we've been doing a lot of work there with the consumer data rights and other initiatives so that we can enhance the portability of consumer data and that we can enable our economy to grow and to capitalise on the changes in the digital economy. The work that we're going to be doing on the industrial relations side to create more flexible workplaces, that's going to be critical to giving business confidence into the future. Tax reform is something that's on the agenda. And as you know, we've passed significant tax cuts in the last two budgets, more than $300 billion of tax cuts, but we also had in our first tranche investment allowances. We had an instant asset write-off, which was extended from $30,000 to $150,000, and also those who were eligible for it, that cohort was expanded. We also put in place the 50% accelerated depreciation initiative as well to support businesses with turnovers up to $500 million. So whether it's infrastructure, tax, industrial relations, skills, deregulation, that's what's going to drive business confidence. You see, business confidence has only picked up about a third of its losses from March, whereas consumer confidence has picked up 95% of its losses since March. As those restrictions have eased, consumer confidence has come back. But the same can't be said in an equivalent amount for business confidence. And we want to see more business investment. As I pointed out, mining sector, off the back of continued demand for commodities, relatively high prices. For example, iron ore is in my EFO at $55 a tonne free on board. It's now trading at $90 plus a tonne. That's off the back of some supply constraints in Brazil, but also continued demand out of China. Mining investment continues apace. Business investment in the non-mining sector is more challenging. The final thing I'd say is around dwelling investment. See, dwelling investment, we started to see improvements in the housing sector with prices, stabilising and approvals, loan approvals, particularly for first home buyers, increasing. And then also we saw auction clearance rates above 70%. And now in this environment of low interest rates, it was becoming pretty appealing for people to enter the housing market. But with this downturn, following the coronavirus, we're going to see a hole there in dwelling investment. And that's why, as a government, we are working on an imminent announcement to support the housing sector, to support construction, recognising it's a long pipeline of not just those who are tradies, but also those who are in the paper, in the timber mill, or providing other equipment or other things for a house to be built. Yeah. So I'll get to it. Yeah.
Treasurer, you've mentioned the importance of working with states in the coming months and years as part of this recovery. Tax reform would obviously be part of that, and some states, Victoria and New South Wales, both have flagged looking at dumping stamp duty. Would the federal government consider helping those states bridge that divide in the revenue as they transition their states?
Look, I've been asked this many a time. I support the states looking at the reform of their tax system. That's to be welcome. And the 30 review is one initiative from New South Wales, which is looking at that issue, among others. And I also understand the motivations around stamp duty and land tax, but also states have got their own balance sheets. They're going to have to make their own choices. It's a discussion, that we continue to have at the KIFA level about, broader reforms. But I would say to the states that they're also going to have to find within their own balance sheets the ability to fund any reforms that they put a priority on.
Just on, you talk about it being a consumption story. Are you sure, but also needing consumption to recover? Mm-hmm. Are you confident that the measures that you're looking at for the construction sector will actually be enough to encourage people to take that big risk, that big step, and spend what money they have got?
Well, we've been talking very closely. Michael Sukkar, as the Housing Minister, has been leading this initiative, and we've been talking to our counterparts. I've been talking to the state treasurers. The Prime Minister raised this issue at the National Cabinet, and I have to say the states have a number of their own housing initiatives, whether it's in social housing or other first home buyer schemes and the like. A number of states have their own initiatives. We think that the states will see what we're doing and support it, and certainly that's the indication from conversations to date. And we think, based on the consultations we've had with the sector, that this will be a very welcome initiative which will support new builds and will also support extra economic activity and therefore more jobs.
There's almost 1.7 million people on JobKeeper, a record number. What do you say to those people about when they might be able to find a job and a lift in the lift in the jobs market? And separately, regarding Virgin, are you worried that Bain or Sias, their applications, they may flip Virgin and you'll see job losses across that company?
Well, as to Virgin, as you know, there's a voluntary administration process. I said at the start of that this was not Ansett, that this airline will work through the process with Deloitte, and very hopeful of getting a market-led solution, and certainly the large number of interested parties would indicate that is the case. So it's too early for me to comment on what the outcome of that process would be. In relation to JobKeeper, of course we recognise that this is a very difficult time in the job market, and also we recognise that a number of businesses may increase the hours of their staff before they take on new hires, because that would be easier for them to do, is go and increase hours as opposed to take on new staff. And we actually saw a major reduction in the number of hours worked across the economy. In fact, we're starting to see that play out in these numbers. But what we need to do to get more people back to work is to lift those restrictions in accordance with the medical advice. And 850,000 people will be back at work as a result, Shane, of stages 1, 2 and 3. Some restrictions, like the international borders, will be in, those restrictions will be in place longer. But that's why I'm hopeful that some of those states will lift their state borders, because I think that will lead to more jobs, particularly in the tourism sector. Yeah.
Given these numbers are largely based on the bushfires, does this show that your promised surplus was in doubt before the pandemic?
Firstly, these numbers reflect the pandemic, the impact on consumption as a result of this once-in-a-century event. When it came to the bushfires, as you know, Treasury, RBA, others had talked about 0.2% impact on the national accounts, but that was over the December and March quarters. This story today is the result of very difficult health decisions that have had a very severe economic impact. This is the economic consequences of the health decisions that we've had to take. And we were on track to deliver a surplus even after the bushfires. We delivered the first balanced budget in 11 years. But clearly, with this once-in-a-century pandemic, the impact on the economy has been very severe. The impact in the June quarter will be even more severe. We've climbed this mountain before, we'll climb it again. Thank you.